Everyone knows that the liquidity is just in trendline liquidity or just an equal high or equal low. But when it comes to the real liquidity, it's in time based, which we will be discussing on this video. Here we got the time based liquidity, right? We got the previous X low to the previous X high. This is the most important thing because framing the model previous X low sweep when bullish is highly probable. Then the time based liquidity here. Type 1, previous day low to the previous day high. We got the previous day low, right? And then we got the previous day high as center on liquidity. Previous day high or low is the most important liquidity. You can just frame the previous day low when bullish, and that is very highest probable entry occurs. Type 2, previous session low to previous session high. So you can just frame the model which is an previous session low to the previous session high when bullish. So just simply mark out the previous session low and then previous session high. When you're bullish, wait for the key level to hit and create the SMT, and you got the liquidity, time-based liquidity entry there. Type 3, the previous week low to the previous week high, and as well as the previous month low to the previous month high. This is like the previous day low to the previous day high, of course. So this is a major type of liquidity where you can just frame the positional trades as well as the swing trades. So the entry models here targeting the previous day high. Previous session low to previous day high is the most important thing here because you got the previous day high as in drawn liquidity. You can just frame the model simply by targeting the previous day high, which is in previous session low to the previous day high as in drawn liquidity. And that is a classic day buy day, right? Profile there. So tip number 1, use the market profile and build a narrative. That's all. And we got the previous week high, right? You can just frame the previous day low to the previous day high as well as the previous week high, which is an important thing where you can just frame the previous week high drawn liquidity by simply just framing the model previous day low to the previous week high. That's all. So if you're targeting the previous month high, wait for the previous week low to get sweep and frame the model according to that. A classic buy week profile is the best example here. Remember the weekly profiles in the previous video. Also, you can just comment in the Twitter post where I just posted to get the PDF as well as the advanced examples, and I will DM you. Time-based liquidity, the first example, right? We got the previous day low right here, and we got the previous session high. Remember the previous day high right here, and we got the previous session low, right? So if you're just targeting the previous day high, wait for the previous session low to get swept, and you got the classic buy day profile there. Also we have, this is the vice versa of the buy example. You got the previous day low as in drawn liquidity. This is on Wednesday. Previous session high here, which is an Asia accumulation. Then manipulation, it took the previous session high, and the previous session low is here. We got the previous day low. Just target the previous day low, the OB, the proportionals, and then the New York session continue. Yeah, the M15 FEG. This will support the trade idea. This is how you can just frame the model right here. And we got the gold chart right here. I got the previous week high right here, and we got the previous day low, which is an internal range liquidity tap, and it took the previous day low, the previous day high right here, and we got the previous week high right here, right? So you can just target the previous week high by just framing the model from previous day low to the previous week high. This is how simple it can be. And we got the same gold chart, which is an previous month high target, and then the previous low got right on, and we got the classic buy week, right? Open low, high, and then a close target in your previous month high, just like that. If you are just targeting the previous month high, wait for the previous low to get run, and we got the previous month high as drawn liquidity. So you can just target the previous week high just by the previous day low sweep, and then yeah, you got the model. This is how this can be the simple. You can just DM me your doubts and comment for an PDF in the Twitter post.